credit demand very muted at this stage, and of course we have seen this trend continue for quite a while, where there's very little demand from the corporate sector, some from the personal consumer, but most of that's mortgage advances. What are you seeing in these numbers?
Well, most definitely very weak demand. I think there are two reasons. One is that individuals, households are simply too scared to take on more credit, despite the recent fairly large reduction in interest rates, short-term interest rates. But there are signs here and there that people are slowly going to the market again and start borrowing money. I think that's one reason. It's simply interest rate and people are simply scared. And the second one, of course, there were these stringent measures put in place by banks making it more difficult for people to borrow money. This, of course, will not stay forever like this. I think pretty soon, within the next couple of months, we will see an increase in demand for credit. I'm very comfortable with the level of, well, actually it's a little bit on the low side, but I'm not too worried about credit demand in the economy over the next couple of months. But I'm pretty sure that the very low demand for credit that we are seeing at the moment will not be maintained. On the money supply data, there's some technical reasons behind that. Money supply increase a little bit higher than what we've expected, but the reason, or the main reason behind that, has to do with one of the so-called counterparts, this net foreign, and it suggests to me that there must have been a fairly large inflow of capital into South Africa. So I think there's a bit of a technical reason behind that. But the credit itself is actually reducing money supply in the economy. And of course, it makes sense if one look at the rand, for example. The rand has been doing not too badly.
Of course, the rand trading around 7.31 at the moment, so it's bounced back from the 7.50 levels it was trading at earlier this week when Spain's debt was downgraded. And of course, we know that the strong rand at these levels has been helping our inflation picture going forward, hasn't it?
Most definitely. There are two reasons why inflation is doing, well, it's very much lower than I think many of us expected. The very, very weak demand, and we can see that in the credit numbers, for instance. And of course, the rand that has been fairly strong recently, and I think the rand will probably remain quite strong over the next couple of months and maybe even strengthen further. I'm talking about against the US dollar and most definitely against the euro, because I don't think the euro will stay where it is. That's another question of what's going to happen to inflation going forward. In fact, if one look at the current demand in the economy, one should have expected the inflation to be around about much lower than what it is currently, around about 2%. If you look at inflation, for example, in many other countries in the world, it's much, much lower than what we have in South Africa. The moment we have we see some demand returning to the economy, that will push inflation up even further. We've got huge cost push inflation from Eskom, for example, double-digit wage increases, and a mirror of other price increases coming through. And I'm afraid the moment we see some demand coming back, we will probably see inflation going above 6% again in the second half of this year.
Now, of course, the rand reacted fairly negatively to the Greek, Spanish, Portuguese story earlier this week. It has bounced back. How do you see the rand reacting as we go forward? Because this story isn't over. Of course, we are hoping for some resolution for Greece, but then it's still Spain and Portugal and a number of other countries with massive deficits in Europe.
Yeah, the longer-term view on the rand is that you have to be negative on longer term of the view, or longer view for the currency for a number of reasons. Our inflation is far too high. Interest rates are very, very low. We've got a huge current account deficit, and probably a current account deficit that will widen up even further over the next couple of quarters and so. And that simply means that we are more and more dependent on foreign capital inflows into South Africa. In the short term, however, and quite ironically, I think the rand is seen as a so-called safe haven at the moment. And that has to do with what's going on in Europe. I don't think this is the end of the European crisis. I think this is just the beginning of the whole thing. I will be surprised really if the Greek crisis will be resolved over this weekend. That is certainly not going to happen. There are other potential crises on the horizon in Europe, for example, the Spanish crisis or potential crisis. And what about Portugal? What about some other countries? What about the local authorities in Europe? Because a number of those local authorities are also potentially in financial troubles. And that points to one potential dilemma in Europe, and that's another bank crisis in Europe. So you have to be negative on the euro itself, and I won't be surprised if we see a dollar-euro at 125 or so by the end of this year. The dollar itself is still the world's most important reserve currency, but it is clear that many countries are moving away from the dollar only as the reserve currency. The Chinese, for example, they've recently started buying Canadian dollars, for example.
And of course, we do know the Canadian dollar's at parity, isn't it, against the US dollar?
It is, yeah. the so-called loonie, it is in parity with the US dollar. I don't think that's going to last. I think over time the US dollar also will come under pressure. That leaves only one big currency really remaining, and that's renminbi, the Chinese currency. And I won't be surprised if we see a re-evaluation of the renminbi within months. That will mean the dollar will go down. If the dollar goes down, gold's probably going to go up, and hopefully the other commodity prices.
And that should be good for the rand, though.
Yes. So in the meantime, in the short term, I'm most definitely quite bullish on the rand. And of course, we've got FIFA, the feel-good factor about FIFA. And I won't be surprised if we see a rand pretty close to 7 rand to the US by the end of this year. But then the other local factors will start kicking in, and I won't be surprised if we see the rand significantly weaker.
What's significantly weaker?
I won't be surprised if we see 9 or 10 or so against the US dollar in a year and a half's time or so.
You mentioned a potential banks crisis in Europe, and of course we do know that German banks, some Swiss banks, have big exposure to Greek debt. Is that how you would see a banks crisis folding out? So Germany's hands are really tied here because they're damned if they do and they're damned if they don't.
Absolutely, they've got a very, very difficult job on their hands. If you're going to bail out the Greeks, for example, then it's a huge a moral dilemma, because what's going to happen to the Spanish if something goes wrong there, for example? If you don't bail them out, what is going to happen to the European Union? What's going to happen to the euro? And what's going to happen to your local banks? Because it is the French banks and the German banks that have been buying up a lot of these Greek debt, and if those banks get into trouble, we'll use taxpayers' money to bail out the banks and indirectly, in a way, bail out Greece as well. So that is a massive dilemma in Europe. I won't be surprised, and I think the correct way of handling the whole thing is actually to let the Greeks default, because they can't use their currency, they don't have a currency, and I think that's the best solution for all of us.
What are the implications if they default?
If they default, I think the other countries will realize that you have to listen to the markets. The markets have been telling us that the Greek situation is simply unsustainable, hopefully, and they've been waiting far too long to introduce all these fiscal measures that they want to introduce now. They should have done this long ago. Greek is actually a third world country. It's a poor European country. They've been acting like a rich country. They've been spending like a rich country recently, and you can't spend yourself rich. And I think that's a very important lesson to the Greeks. If they do default, there are a number of possibilities. I don't think they necessarily will. I think the IMF and Germany will eventually bail them out. But I'm not so sure that the political fallout in Germany, for instance, will necessarily be so good for the current ruling party.
And of course, we have seen images of Greek protesters today. That's because the retirement age has been lifted from 53, which is a ridiculously young age, up to 67 because 13th and 14th checks have been cancelled. So these austerity measures are going to be difficult to implement.
Just put the thing in perspective. In order for the Greeks to get their fiscal deficit down to manageable levels, you have to cut the salary bill, for example, by 20%. Now just imagine if you wake up tomorrow morning, your salary is 20% lower than a month before. And
imagine telling Kusatu that.
Telling Kusatu that, that's going to be impossible. No, it's a difficult time in Europe, and the Greek, I think, is only the Greece situation is only the beginning, and that's part of the reason then why I'm very, very negative on the euro for the time being.